I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, partner and portfolio manager at Feneck Consulting. Thank you so much for joining me. Great to have you here.
Likewise. Thanks for having me back.
Of course, really good to be speaking with you, and we're in person at BRAC, always nice. Although I think a theme here is people are looking at, especially the gold price, seeing gold near record highs, which we talked about in our last conversation, and they're wondering what's going on with the gold stocks. They see this disconnect.
Absolutely.
So, yeah, I want to start by getting your thoughts there, when we might see that correct itself.
Sure.
Yeah.
That is the $64,000 question as to when that disconnect will reconnect. And it has been extremely frustrating for the last number of months, plus all of last year, really. Gold, tremendous performance in my view. We sat down a year ago right here at VRIC, and I said that I thought 1790 to 1800 would hold, and it did. And we've made a test of that back in early October, when it was just before the Israel-Hamas conflict, and then just gold took off, right? And so gold has done its job. Gold has performed, it's protected wealth, it's done everything that you'd want it to do, yet the producers of gold, or the developers, or the explorers for gold, have underperformed dramatically. And by dramatically, to give you some perspective, it's not just the juniors. If you look at Newmont, which is the largest holding in GDX, which is a $13 billion ETF, Newmont is trading $1 off its 3-year low. I don't know about a 5 or 10-year chart. I usually look on the shorter term side to get ideas on technical and support and resistance, but it's just not looking good. And so clients are feeling that pain. It's real. I do think that we're living in a world, though, that gold has a place now, where when you and I met, it kind of did, but now it definitely does. So I would just encourage people to be patient on the gold equity side. And on the silver side, silver has acted both as a precious metal and an industrial metal, as you know. Much more like an industrial metal over the last 2 years, I'd say. And that's why it hasn't really performed as well as I would hope, or many investors would hope. We were calling on your show and other shows that it wouldn't break $28 all of last year or the previous year, and it hasn't even really come close. It's really been struggling with 25.5 and 26. So once we get through that level with some authority, that would be positive. But as we sit here right now, we have to get through like 24 first. So we kind of educate investors, as you know, Charlotte, like one step at a time. Let's get through this level, then let's test that level and see if we can get through that. And then we can get more excited, because some of these silver companies really need higher silver prices to be profitable.
Yeah, and before we turn the camera on here, you gave what I thought was some good advice. You were talking about how we need to be patient for gold and silver, and you mentioned, you don't have to be doing this. You can do something else if you don't want to wait. So maybe you want to expand on that a little bit, because I thought it was a good point.
Sure. Yeah. I mean, there's so many things you can do with your money. You don't have to stick it out in this sector if you don't think that you have the stomach for it. It's not for everyone. I've said that so many times. It is a challenging sector. However, the upside can be extreme, because you really have to look at everything, Charlotte, when you're investing as, percentage growth, right? If I have a 10-cent, junior gold stock right now, and it was $1 3 years ago, which is not unusual. A lot of these stocks have lost 80 to 90% of their value. Then to go from 10 to 20%, I make 100%. I don't need to go back to $1. I can double my money if this thing just goes from 10 to 20%, 20 cents. That's the opportunity that we have here today that we didn't have when we met, because prices were still very, very high in 2020 coming off the pandemic. And I think the opportunity right now is, well, I should say that there's more risk by not being in our junior sector than there is being in it. And I know that I would probably get shelled by some for that. But I think you have to use a rifle approach, talk to CEOs, understand what their timeline is for news, because not everything is created equal, right? There's a lot of bad operators right down there through that door. I've met some today. So there's a matter of like sifting through the people first, whether that's the management, meaning a CEO, or that's a geologist in the field. And then if you get on board with that team, and they have cash, and they've got a good jurisdiction, and then you can get behind that story.
And usually you're pretty good about showing us what you're looking at the moment. So in terms of gold and silver companies, I wondered if we could get an update on where you see interest and excitement right now.
Sure. Well, I think GDX should be part of everyone's portfolio. It's about 5% of our portfolio. I use that as a hub, a core holding, because it has, Newmont, Agnico, Barrick, all the big boys in there. And then you can build out from that into some other names. We've mentioned Goliath on your program before. We like the fact that Crescat, Rob McEwen, Eric Sprott all own collectively about 30% of the float. But we look at, there's so many names in gold right now that are really attractive. But, we've mentioned Cartier in your program. I still own that. On the silver side, I've just been spending more of my time because there's even more of a disconnect there. And as a value manager, we love that. So when I look at Guanajuato silver, producing in Mexico, they already have all their permits. They've got a lot of the heavy lifting done in terms of their different locations or projects, if you will. They've got an awesome field team. I'm seeing them tomorrow morning to get an update. Silver X reminds me of Guanajuato in Peru. They're also producing, but they're in a different jurisdiction. I would argue that with Castillo out of the way now for 14 months, that jurisdiction should be doing better than it is, because the risk is really off the table right now for the most part. And then I'm looking at things like companies that have larger deposits in silver, many, many ounces in the ground. AbraSilver just came out with a really good result here in January on their Diablilos project in Argentina. The Salta province in Argentina, where they are, is actually quite good. It gets a better tax rate, and they have 258 million ounces of silver in the ground on the M&I side. So, really interesting project. I like John as a leader. He's very, I wouldn't say aggressive, but he's very confident, and I like aligning with people that are going to get it done somehow, right? Like they have a plan in place, and they've got, some cash in the bank, but they're in the right place at the right time, putting out consistent, well-written and well-thought-out good, news flow. And lastly, we've mentioned Aftermath on your program before. That's been all over the map. We mentioned it at 12. We mentioned it at 14. It just ran to 23. Now it's back to 14. I mean, it is bouncing around because, in my opinion, they need to put out their metallurgical results. They're going to come sometime in this quarter. So when we look at something here, January 21st or whatever it is, what's another 2 months, right? This is something that's going to come. It could be a game changer for the company because of their manganese components, and that would put them into a whole nother valuation category, in my opinion.
All right, so some good options there for people to look into on the gold and silver side. And usually we go into more when it comes to gold and silver, but today I know you have a conference you're involved in coming up focused on energy. So maybe give us an idea of when that's coming, what it's all about, and then we can talk about the energy opportunity.
Yeah, thank you. I'm very passionate about the sector, and I think that in parts of the U.S., we haven't been doing enough justice to junior companies to let them kind of tell their story, right? Beaver Creek in Colorado, I think, is the premier, junior mining conference in the U.S., but when a uranium company or a copper company would try to attend, a lot of times management would just tell them, politely, no thanks, because we're going to focus on gold and silver. So I talked to the coordinators of that conference and said, why don't you start something in the U.S. that's going to be focused on copper, uranium, lithium, PGMs, something that would just be for those kind of companies. So they really got behind that story. I mentioned Washington, D.C. as a jurisdiction because that's where I'm from. I spent 25 years there, so I can bring high net worth retail there, which I think is really, as you and I've talked about before, really the biggest challenge for a company attending a conference like this is, I spent $10,000 to $15,000. I'm seeing the same people from last year. It's like people want to meet new clients, so that's on my back. If we don't get that done, that'll be my fault. But I feel very confident that I'll be able to draw a lot of high net worth people from New York City, Philly, Baltimore, D.C., Virginia. There's a lot of money in the Mid-Atlantic. And a lot of these people come from the financial advisor type world where I come from, that they don't have really an experience with mining. they understand clean energy as a trend and as something that they need to know more about, but they haven't really done much other than maybe buy a solar ETF or buy a gold ETF or something. So there should be some really good buyers there, and I hope companies will approach me, or any of your listeners that want to attend will approach me, because we're giving anyone who's an accredited investor free admission to the program. We're going to do a 2-day conference, Monday, Tuesday. We're partnering with the Northern Miner. So Anthony's team will be in charge of the speakers. I'll be a speaker there, but also we have people from the DOD, the DOE lined up. I mean, it's a really, really good lineup right now on the speaker side and the company side. So we're very excited about that.
Okay, yeah, and if you've got a link, we'll drop a link in the video
Sure.
description for people to learn more. It sounds really exciting. And okay, so talking about energy, if we talk about energy, of course, we've got to go over uranium. And we've
Sure.
talked about uranium a little bit in the past, but not since there's been such huge amount of excitement around it. So one question I always like to start with is, where are we in the current cycle?
Well, the spot price is doing extremely well, right? Spot has crossed $100 for the first time about 10 days ago. I didn't even think spot would get here this quickly. But one of the things that also is interesting, I just read a piece from Sprott that put this out, because Sprott has the uranium position that they have, and also has a pretty cool ETF in the junior space. They said that there was not the biggest disconnect between equities and the spot price last year, but there's still like a lag effect. So we were telling clients in December, hey, you want to get, some of these uranium juniors now, because the move is on. There's momentum in this subsector of the commodities world. And we were right, because January's been an awesome year for uranium equities. So we continue to add to those names. I've mentioned Forum Energy on your program before. That remains to be our largest holding at about 3% right now. I think Rick, again, 40 years in the business, knows what he's doing. They cashed up. Their GO, Rebecca Hunter, knows what she's doing. So when you look at the entire team, it's just an exciting place to put money right now. And they'll be part of what's called Uranium Night tomorrow night. It's being held here in Vancouver, and there's going to be Coastal Resources, Pure Point, Encore, a bunch of different companies, Nuclear Fuels. So I'm going to meet a bunch of CEOs there to try to challenge myself to learn more about what they're doing and about that subsector, because as I've said before, I really only got interested in uranium just around the time of the pandemic, because I had been, heard about it for so many years from Rick Rule and so many investors, but I had never gotten behind it being more of a metals guy. And I think that's important to always challenge yourself to learn more, because, I did it very late in life, and we're doing well in that sector right now.
Yeah, well, I think if you came in around 2020 for uranium, maybe you just missed all those ugly years when it was not doing so well. So there you go. So on the energy side, you mentioned a whole slew of different topics that you'll cover at this clean energy conference. One that we've spoken about before is, of course, copper. So maybe
Yes.
we check in with you on copper. I've heard a lot of mixed opinions on copper. It feels like everyone agrees that the long-term story is looking good, but maybe this year is not so hot. So thoughts on copper and what you're looking at in that sector?
I would disagree with that to the extent that copper last year, if you look at CPER, which is the US ETF tracker for the price of copper, actually finished flat to down last year. It didn't do well at all last year. So I guess what is the argument that it won't do well again this year when people like Goldman Sachs are calling for a really good year? You have to look at where institutions are starting to talk things up, and copper now with a soft landing, quote unquote, in the discussion from the Fed as of December 13th. I think that puts a big bid on copper, big bid on nickel, but not right away, right? Probably by mid-year. It takes time for people to buy that the Fed is going to be, this dovish, right? Because we've talked so many times about how hawkish they've been. So now for them to flip-flop on one meeting like this, people want follow-through. I want follow-through. If we were to end the year December 31st and you and I had an interview, the CME Fed Watch tool, which we've talked about, really good tool for investors, free. It showed an 81% probability that the Fed was going to cut rates, March 20th. So we looked at it this morning, and it's 46%. So not as rosy at all. Then you look at the May 1st meeting, and it's a 50% chance of a cut. So that means net from January to May, we may have a 50% chance of a one cut. This isn't like as bullish as we saw just at the end of December, right? And I'm not trying to be a downer. I'm trying to say that this might take longer than people expect, which is why we think copper will have a really good run from, say, summertime this year into the end of next year. That 18-month stretch should be pretty exciting. So we are aligning. We haven't bought physical copper yet, but we are buying some of the larger cap names as well as the smaller cap names.
Yeah, and I think that confusion on where copper is headed does kind of come from uncertainty about where we're actually going in the economy. So I think the way you explained it helps make it make sense.
Yeah, and that goes for nickel too. Nickel is a bullish metal. Copper is a bullish metal. They aren't like gold and silver, which are precious metals. They're going to trade differently.
Okay, and on the energy side, is there anything else you would bring up? I don't think we've touched on oil and gas, which you mentioned as well. Would you like to tell us what you're seeing there? Because I know that's one that I've been hearing about it a little bit more for the last couple of years as people say, okay, we can't get rid of it yet, of course.
Right. Well, I don't know. I'm not as sharp on traditional oil and gas right now at the moment because I've been spending so much of my research time on uranium, on solar, and different things. But I will say that there's always a place in a portfolio for traditional oil and gas. There's a number of names that we're looking at right now, but we haven't pulled the trigger on. I would say putting a position on just oil through an ETF that doesn't produce a K1 would be an interesting investment because oil will do better in a environment that is uncertain, especially, what I'm talking about is, world conflict. Unfortunately, oil should go through $100 a barrel at some point in the next 12 to 15 months. And then, you've got a nice gain from today's prices, right? But we look at something like solar as I've been spending some time with maybe the last month or two. In fact, on our last interview, I mentioned something that has to do with the solar world, the Tellurium piece. That stock actually has gone up 60% since our last, meeting. It doesn't take much to move some of these stocks because, again, if you look at the capital structure of something like First Tellurium, very tightly held. The CEO and his wife own, I think, about 12, 13% of the entire float. So it's doing that work on each of these names. It takes a lot of time and effort. I would say SolarBank is something that I'm meeting with tomorrow here in Vancouver. They're actually a larger stock, to mention something in the larger cap space along with the GDX kind of theme. SolarBank has focused their efforts in Canada, Maryland, and New York State. And I grew up around that area, so I know that area quite well. And they're just building solar, panel fields. It's really a cool process, and the revenue growth in that sector is like about 20 to 21%. The compounded annual growth rate. So when you look at 2024 to 2030, the sector itself should do quite well, but a small company like that with a tightly held share structure should do very well.
Okay, I think we've taken a pretty good run through all the main categories that we hope to go through. So just any final brief thoughts that you would leave investors with? I'm sure we'll check in with each other again in a couple of months.
Yeah, sure.
Things to leave people with.
Yeah. I would say hang in there. It's such a hard sector. This sector will derail most really intelligent, wealthy people. And so when you only have a little bit in your pocket and you're trying to make this work, I know how frustrating it is. I was there in the 90s. And I've never given up because I think there's a lot of inefficiencies in mining, and those inefficiencies can be capitalized on, when the markets turn. So I think we're really close. I think we'll watch gold. If gold breaks 1,800, don't listen to anything I just said. But I think gold will hold in there and surprise people to the upside as we move forward over the next number of months. And silver at some point will play catch up.
Okay, I think that's a good place to leave it. And of course, we will check back with you soon, so we'll get some updates. Thank you very much.
Thanks, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is John Feneck. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.